we have to talk for a couple minutes about the stats because statistically, like 90% of traders don't make money. And so the question then becomes, well, what is different about what you're offering? And why is it that more people don't make money statistically? And there are a few reasons for that. A couple that I want to give you are would be first that there's market tuition to be paid. When you're learning anything, it takes time. There's a learning curve, and there's a learning curve when it comes to the market as well. As traders, we call this market tuition. Usually what ends up happening is people end up getting into the market and they end up making money initially and then losing money even faster than they originally made it. And we call this market tuition because you paid some money and you paid the price for not understanding and having to learn. And the average trader doesn't take time to actually understand the market, to understand the setups and understand why they're entering trades, why they're exiting trades and things like that. And they're not willing to pay the market tuition. The reality is this, I just want to put this out there. It's going to cost you money to learn, not only through things like purchasing courses, but also you will learn through your losses. Every loss that you experience is going to be a learning opportunity for you to realize, okay, what could I have done differently? And there is no way around the market tuition. You can lessen the tuition, and that's my hope for you, is to lessen the tuition for you so that it costs you less, so that you can learn from some of the mistakes that other traders make, so that you can learn from the mistakes that I've made, so that you can learn from me and my strategy, and you can help lower the cost of your market tuition. But there is no way around it, and most people are not willing to pay it. The second reason more people aren't successful as traders is because it requires personal growth. Becoming a great trader is going to require more than understanding the setups. As a matter of fact, the setups are the easiest thing for me to teach. What separates people from being able to take the setups that are taught and then execute them is that it requires personal growth. It requires a controlling of your emotions, which we're going to talk about. It requires understanding yourself and understanding your temptations so that you can execute the setups perfectly. And a lot of people are unable to do that. Now, I say all of that and I don't want to scare you. I just want to put that out there and let you know the reality of what you're doing. And then I want to put that at ease and tell you this, listen, I believe that you can beat the market. And what I'm going to do is I'm going to give you the same tools that I use to beat the market every single day. So before we jump into the first course, let's take a minute and let's talk about kind of the pathway of where we're headed in this course. We're going to start with some foundational stuff. And I know the temptation is to jump right into how can I start making money right away. But the foundational stuff that we're going to talk about before we ever teach a setup is so important. And what I found in all of my time working with traders is this. Most of the market tuition people pay comes from the foundational stuff that I'm going to talk about in these courses. So though you're going to be tempted to skip, please don't. Take some notes. Try to get this stuff down because the foundational stuff will set a pathway for you to be able to make wealth. And if you do not pay attention to the foundations, you skip over the foundations, you don't learn the lessons that need to be learned that are foundational for the market, you're going to struggle, and that learning curve is going to be a lot larger and you're going to pay a lot more market tuition. So lean in to the foundational stuff. And then after we've gone through the foundational stuff, what we're going to do is we're going to start talking about setups and the exact setups that I use to make money in the market, with the goal then being that you can build wealth and have a plan to build wealth in the long run. Now, what we're going to be doing when we talk about the building wealth stuff, I want to give you a little bit of a preview, is I like to use the example of buckets. And I use a 3-bucket system that I'm going to introduce now. Now, the goal with these buckets is that you will have passive income. Because let's be honest, you want to learn to trade, and that's great. But trading is not exactly passive income. Trading is something that requires you to be staring at your screen, requires you to be in front of your computer. And there are more and less passive ways to trade, but there's no way around the active side of trading that you're going to be required to learn. But you're going to eventually want to hit the passive income phase. You don't want to work your whole life, right? And so when you look at these 3 buckets, a couple of observations that I want to make. We've got the low risk bucket, which is going to be day trading strategies, some of the swing trading strategies that I'm going to teach in this course. And then we are going to move to a more medium risk bucket, which is going to be less risk, inherently less risk, but it is going to be ways of making passive income, picking stocks, and things like that. With the hope that you will also move on eventually to a low risk bucket. The thing that you need to know about these is that also the reward scales with each of these things as well. So higher risk strategies have the potential for higher payouts than, say, a low risk bucket or a low risk strategy. And so the goal is to have a whole host of ways to make money through these different buckets. You don't want to put all of your money in the high risk bucket for a higher return, or the medium risk bucket for a medium return, or the low risk bucket for a low return. You want to have diversification among the buckets. The other thing that I want to say about this is that you need to think about your age. And so when you look at these buckets, this is going to change. Like your risk strategy typically changes as you get older. When you're younger, you can afford to take on more risk because if you have some sort of catastrophic loss, it's not something you can't come back from. However, as you get older, you want to move more towards medium and lower risk opportunities. It doesn't mean that an older person's not going to have, higher risk opportunities and stuff like that, or never use anything with their low risk bucket. But what it does mean is that you're going to have more in your high risk bucket. What it does mean though is that you're going to have more in your low risk bucket and less in your high risk bucket as you get older. The other thing that you need to know about these is that all of these are going to change from active to passive. And so day trading is active. The stuff we're going to teach in the medium risk buckets are more active than just like long-term investing or putting money in index funds or whatever. But it's less active than day trading. And then your longer term bucket, your lower risk bucket is going to be very, very passive. It's going to just sit and let your wealth grow. And so the only thing I really want to say about these buckets as we introduce them is a couple of things. First off is that you should feed your buckets. And so to feed your like high risk bucket, you're probably going to take some money from your other sources of income, your savings or whatever that you don't need for anything like life-changing, like a house or retirement or something like that. You're going to put that in your high risk bucket. And then as you start to make money in your high risk bucket, a strategy that I recommend is to then feed your other buckets. So feed the stuff from your high risk bucket into your medium and low risk bucket. Feed the stuff from your medium risk bucket, your gains from the medium risk bucket into your low risk bucket as quickly as you possibly can so that you can begin to make passive income and not have to focus as much on the active income side of things. Now, hopefully you're not overwhelmed just yet. What I do want to tell you is I'm going to walk you through setups for each of these buckets, the exact setups that I use to feed the different buckets and to make money on the different buckets with the goal of building wealth through the markets. So though there are many things that you can do that are high risk, medium risk, low risk, I'm specifically going to be talking about how to take advantage of the markets. Let's jump into the first action steps here, all right? I want to give you two. The first is this. I want you to begin paper trading now, all right? I want you to begin paper trading now. If you're wondering where to start with that, probably the easiest place to begin paper trading would be the Webull app, Webull, Webull app. And I want you just to begin learning your way around how to place orders, how to sell things, how to set different order types, stuff like that. So start paper trading now. Find the consistency in the markets with your trading setups, with your risk and all of that stuff. And then you can size up, then you can scale. And so I want you to start with paper. And I teach something called 20/20 vision, all right, where you're going to start with paper. And then when you find the consistency that you're looking for, you're going to move to like a small position size. And if you're still consistent, once the emotion of having real money is involved, then you can move on to like sizing up to a normal position size when you're trading. But I don't want you to get that out of order. I want you to start with paper trading. The other great thing about this is you'll be able to actually watch, as you learn things in this course, you'll be able to watch your paper trading account grow and see the strategies that work best with you. The second thing that I want you to do is I want you to get a journal. Now, this could be a trading journal. I use something called Trader Sync online. It does cost a monthly fee, so I know that's not for everybody, but even like a notebook or an Excel spreadsheet or something like that would work perfect for you. And what I'm gonna do is I'm gonna give you some writing prompts after most of these videos, and you can begin writing stuff down. But also, I want you to be able to collect the data that you need from your trades. So what kind of data do I want you to keep? Well, I want you to keep track of your entries. What price did you get into the trades on? I want you to keep track of your exits. What was the exit price that you got out of? What was the setup? Like, in other words, why did you get into the trade to begin with? I want you to journal your emotions. What were you feeling as you got into the trade? What were you feeling as the trade was playing out? What did you feel as you were getting out of the trades? This is going to give you a lot of data. And then I also want you to keep your profit and loss from each individual trade, because what you need to become a good trader initially is you need data to be able to look at hard data about your setups, about your profit, about your risk, and all of that will be found through keeping data on these different things that I've told you to keep track of. And I call this 2020 vision, because what your goal is going to be, as we're going to talk about it in a little bit more, but I want you to be able to have 20 trades on paper that you can look at and say, okay, I've got the data from paper trading. And I want you to have 20 trades in real life where you can look back and say, okay, now that emotions have been involved, I've got 40 trades that I can look back on, and I can see that my setup works, that my emotions are under control, that I'm using the right risk management. And then you can size up once you've got 2020 vision, and you can see clearly the stuff that you need to see from your journal and from your trading. And so start paper trading, start journaling today. Why? Because you're going to watch how these things work together in real time. You're going to be able to form good habits starting today, and you're going to be able to see your account grow, and you're going to be able to see the things that I teach you in this course begin to take place and take root in your own life and in your own trading and in your own wealth building.